Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's top stories with you. We're starting off with a bang, as the markets are seeing some significant movements. The Nikkei 225 has hit an all-time high, driven by optimism around the US-Japan trade agreement and the strength of big tech. Meanwhile, China's 11 trillion stock market is experiencing a steady resurgence thanks to strong domestic liquidity. But not all news is good news. CoreWeave, a company that was expected to deliver high growth, has disappointed investors with its latest earnings report. The company's same-restaurant sales only rose 2.1%, and it slashed its full-year guidance. As a result, the stock is taking a beating, down 23% in pre-market trading. We're also seeing some interesting trends in the crypto world. Bitcoin may not be the reason for the breakout summer, but other cryptocurrencies are making waves. And in the world of finance, the VIX fear gauge has sunk to its lowest level since December, indicating that investors are becoming more comfortable with market volatility. In other news, Japan's auto industry is cautiously optimistic about the US-Japan trade agreement, and Dutch Brothers is eyeing expansion as it battles with Starbucks. We'll be keeping an eye on these developments and bringing you updates as more information becomes available. As we navigate the complex world of stocks and finance, it's essential to stay informed and adapt to changing market conditions. On the Riskwiser Zone, we're committed to providing you with balanced and unbiased analysis to help you make smart investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're joining us again as we dive into another fascinating story that's making waves in the world of finance. Today, we're taking a closer look at the recent surge in the US stock market, which has left many experts scratching their heads. As we all know, the trade war with China and the ongoing economic uncertainty have been major concerns for investors. However, despite these challenges, the S&P 500 index has managed to bounce back from its April lows and is now nearing record highs. But what's behind this sudden turnaround? Some strategists, like Morgan Stanley's Dave Wilson and former Wells Fargo expert Brian Belsky, had predicted that the market would recover by the end of the year. They attributed their bullishness to a combination of factors, including a sharp recovery in earnings per share revisions, breadth, and a sentiment indicator that showed clear capitulation on April 7th. On the other hand, many other experts had initially predicted a gloomy outlook for the market, only to revise their forecasts later. This has raised questions about the reliability of market predictions and the challenges of navigating uncertain economic waters. It's essential to note that the stock market is inherently unpredictable, and even the best experts can get it wrong sometimes. However, it's also important to recognize that some strategists, like Wilson and Belsky, had stuck to their guns and trusted their process, even when the news flow turned negative. As we analyze this story, it's clear that there are different perspectives at play. While some might argue that the market's recovery is a testament to the resilience of the US economy, others might see it as a sign of complacency or a potential bubble waiting to burst. At the Riskwiser Zone, we believe in presenting a balanced view of the situation without taking sides or promoting any particular agenda. Our goal is to provide you with the facts, insights, and expert opinions so you can make informed decisions about your investments and stay ahead of the curve. So, what's next for the US stock market? Will it continue to defy expectations and reach new heights, or will the economic uncertainty eventually catch up with it? Only time will tell, but one thing is certain. We'll be keeping a close eye on developments and bringing you all the latest updates and analysis. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're closing out today's episode with a look at two interesting stories from the world of finance. First up, we have an article about Citigroup stock and how it might be primed for a breakout. The author suggests that using a cash-secured put could be a great way to potentially buy the stock at a discount or generate some income if it continues to rise. Now, I want to break down this strategy for our listeners. A cash-secured put involves writing an at-the-money or out-of-the-money put option and setting aside enough cash to buy the stock. The goal is to either have the put expire worthless and keep the premium, or to be assigned and acquire the stock below the current price. In the case of Citigroup, the author suggests selling a 95-strike put, which could generate around $260 in premium. This would give the trader a break-even price of $92.40, which is 3.5% below the current price. Of course, there are risks involved with this trade, including the potential for Citigroup stock to fall sharply. Moving on to our second story, we have an article about The Trade Desk. No, wait, it's actually about an AI stock that just dropped and might be a buying opportunity. The author argues that despite the drop, the company's strong fundamentals and growth prospects make it an attractive investment opportunity. The article highlights the company's use of artificial intelligence and its potential for long-term growth. However, as with any investment, there are risks involved, and investors should do their due diligence before making a decision. So, what can our listeners take away from these stories? First, it's always important to consider different strategies when investing in the stock market. Whether it's using options or buying and holding, there are many ways to approach the market. Second, it's crucial to do your research and understand the risks involved with any investment. This includes looking at the company's fundamentals, growth prospects, and potential challenges. Finally, it's essential to be patient and disciplined in your investment approach. Avoid making impulsive decisions based on short-term market fluctuations and instead focus on your long-term goals. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.